even though things appear to be cooling down for the moment, I want to take a minute to just pause and to learn from the perceived current banking crisis, which, in fact, if we look deeper, is a confidence crisis that I believe is rooted within a communication crisis. This is why in this video, I'm going to show you how you can confidently communicate confidence as a financial brand leader to calm the chaos, to calm the confusion, to calm the conflict that so many people feel right now because of what they're hearing, what they're seeing, and what they're reading through the mass media, but more importantly, through their social media feeds. Hi, my name is James Robert Lay, and I am the CEO of the Digital Growth Institute, where we teach financial brands how to level up loans and deposits in the age of AI. And for over 2 decades, I have been studying the intersection of marketing and sales, technology and human behavior as a digital anthropologist. And if you're a financial brand leader struggling how to figure out the best way to communicate confidence with your team, with account holders, and with people in the community that you serve, this video walks you through exactly what you need to do next so that you can confidently communicate confidence in a digital world, because confidence, just like fear that so many people are feeling right now, confidence is contagious. But first, if you find this video helpful, be sure to like it, subscribe to this YouTube channel, and share this video with others that you work with. And if you have a question, if you have a comment, don't hesitate to share it below in the comments, or connect with me, send me a direct message on LinkedIn, where I am very active. Now, let's take a moment to briefly discuss how we got to this moment, how we got to this crisis in the first place. I'm not going to break down why we've had these bank failures in March of 2023 here in the United States. There are people who are way smarter than me that are doing a fantastic job doing just that, explaining what led to these failures. However, what is important to note is that the role that digital communications has played, communication platforms like Twitter, what the role that they have played in the collapse specifically of Silicon Valley Bank. I want to go to the board and break some of this down, because it all starts back on March 10th. March 10th was the day that SVB collapsed. And I want to give you a bit of a timeline here. So we got March 10th, 2023. I posted on LinkedIn that the collapse of SVB was a result of a social media wildfire. It started as a small spark, but it really quickly spread and grew to take down an entire financial brand. And in my LinkedIn post, I wondered if the SVB event, say it occurred back maybe in 2006, 2007, before the rapid rise of social media, would the outcome have been the same? Put another way, what we've observed with the SVB collapse was the first ever digital bank run. In fact, this was not even a bank run. It was more like Usain Bolt doing a gold medal sprint at the Olympics, making bank runs of the past look like a leisurely Saturday 5K in the park. And I would say this is where the hidden danger lies for so many financial brands, even in 2023, because the vast majority of financial brands either A, they don't understand. They don't understand what is going on through the context, through the lens of digital communication, of social communication. But I would say even more deeply than that is B. They don't appreciate the speed, the scale, the reach of social media. And I would say that's because of a lack of awareness. And this is something that I've been coaching, that I've been guiding, that I've been advising financial brand leaders on now for well over a decade, to bring awareness, to bring clarity into potential roadblocks that we're seeing right now, but also the opportunities on the other side. Now, you might be thinking, James Robert, our financial brand is fine. No one is calling. No one called us during this time. Everything looks good. Why would we want to cause panic to begin in the first place? There's nothing to worry about here. This storm has blown over. It will continue to blow over. They're all good points for sure. However, I see SVB as a canary in the coal mine and a real-life classroom that we can all learn from, because, well, you might have the perspective that everything is A-okay at your financial brand. That might not be the case for all of your team members, for your account holders, and for the people in the communities that you serve. And there's no better time than times like these not to knock the competition that's taking a negative approach in communication, that's taking a negative approach in positioning. But there's no better time than times like these to reinforce your strengths, to share your knowledge, to share your expertise, to recommunicate your commitment to the communities that you serve and create value for. Here's why. I'm going to come back to the board and break this down, because it's important that we understand and gain some perspective. You see, perspective is the sum of context and framing. And your perspective as a financial brand leader of the current banking crisis is perhaps, well, there's no crisis at all, because that's based upon your internal context and framing around the inner workings of your financial brand as a financial brand leader. Well, this internal perspective, however, though, leads to the curse of knowledge, because if we were to step outside of your inner worldview for just a moment and into the hearts and minds of your employees, of your team members, of your account holders, they probably don't have the knowledge that you have accumulated over the last 10, 20, 30, 40 plus years of a career. And because they don't have the knowledge, they don't have the clarity. Because they lack the clarity, they lack the confidence that you feel. For example, I know many today, including my mother-in-law, who has called me up a couple of times asking about the safety and soundness of her financial brand. Many do not know how, say, fractional banking works, or they don't even understand what it means for their money to be FDIC or NCUA insured. And then it's important to pause for just a moment to ponder on, what about the perspective of your employees, your account holders? How's their perspective being shaped? Because once again, as we have on the board back here, perspective is the sum of context and framing. And a person's perspective or perception, that creates their reality. Even if that reality isn't really real, it's real to them in their mind. It's real to them. It's how they feel. And this is where social media comes back into the narrative, because there's a high probability the perspective of your employees and of your account holders, their perspective has been shaped through this experience, context and the framing of what they've been seeing, what they've been hearing, what they've been reading, what they have been watching through their social media feeds, through their social media streams, that really amplifies the 24-hour news cycle. For example, here are some headlines that I have pulled in the past couple of days, even though it's been a little over a week since the collapse of SVB. ABC, they tweeted, "The market is telling us something very bad is coming as the global banking crisis deepens." According to CNN, Moody's sees harder times ahead for all U.S. banks and puts 6 on downgrade watch. The Harvard Gazette notes, more turbulence likely ahead after bank collapse. Fox News shares, investor who called the Lehman's collapse predicts that the next big U.S. bank failure. And USA Today reports, Silicon Valley Bank collapse may not be the last. BlackRock CEO warns of a slow rolling crisis. Now imagine just for a moment you didn't work within the financial services space. You didn't have the knowledge that you have. You didn't have the clarity that you have. You didn't have the confidence that you had. Do these headlines convey confidence? Do they convey a sense of calm? Or do they paint a picture of panic, a picture of pain, a picture of crisis? But James Robert, those are just headlines. They don't tell the whole story. Yes, indeed. They are just headlines. But according to research from copyblogger.com, a whopping 8 out of 10 people will only read the headline of an article, while 2 out of 10 people will go on to actually read the entire article. Even more troubling, I see the possibility, and this is more of a future perspective here, but I think it's one that we must be aware of in the present moment, because the potential for deep fakes to be a future threat for financial brands. You might have a bad actor, could be a disgruntled employee, could be an account holder, and they launch a social media attack against your financial brand in ways that you never, ever imagined. And this would damage, even demolish the reputation of your financial brand that you have spent years, decades, centuries to build, all in the matter of moments, days, hours, as we recently saw with the SVB digital bank run. Now, this threat, this communication threat, this confidence threat, I say is even more real for community financial brands, because I would predict that it would be the community brands who would quickly lose control of the narrative simply because they lack the knowledge, the resources, the capability, the capacity to prevent and circumvent a digital run on their bank or credit union. Keith Casello, CEO of Locality Bank, he shared the other day on LinkedIn, quote, by industry total assets, community banks are erroneously underestimated for their importance. Banks with total assets greater than $10 billion hold 86% of banking industry assets. The top 4 banks holding 50% of those large bank assets. However, community banks hold $3.4 trillion in total assets, which are very important to the markets they serve, primarily small and medium businesses and rural communities. If you've been following the content that I have shared over the past decade, you know how passionate I am about not just helping community financial brands survive in a digital world and now the age of AI, but more importantly, thrive. And that's because community financial brands, both community banks and credit unions, they are a commerce conduit for the local communities they serve, creating value for people as well as the small to mid-sized businesses in those communities. This is a personal passion topic of mine as a 20-plus year entrepreneur, because according to author John F. Deeney, while entrepreneurs only make up 3% of the population, it's this tiny 3% who creates 2/3 of the jobs in our economy. And this is where the current banking crisis, it's really just a confidence crisis. That word confidence, it is rooted in Latin and essentially means to trust completely or to have complete faith in something or someone. Well, trust, which is part of the human pyramid of relationships that we teach here at the Digital Growth Institute, is the combination of 2 key elements. Trust comes down to just two things: words and actions. What you say and what you do. This is where, if we dig deeply, we find that the perceived banking crisis is not just a banking crisis. It is a confidence crisis that is truly a communication crisis. Our research from around the communication that financial brands have been sharing within the week or so after the SVB collapse shows that there is a significant communication crisis throughout the entire industry. And as a result, this communication crisis ends up in a confidence crisis. And we're still crunching the numbers and processing the data, but we've had about 27 financial brand leaders initially respond to three questions that we asked. And the early reports to these responses yield two primary communication patterns that prove there is a confidence crisis. There is a communication crisis. And these patterns are: number one, slow communication. Yes, there have been financial brands who were communicating, still are communicating with account holders, with employees, but it took their time. They waited a day, a couple days, some up to a week. They sent out a letter, they sent out an email to account holders, letting them know that their bank, that their credit union was safe and sound. Fantastic. But the big challenge here is that this one piece of communication is simply not enough to combat the overwhelming confusion, the chaos, the conflict of what people are feeling because of what they hear, what they see, what they read on social media. It's a matter of frequency or lack of frequency, along with the misalignment of communication channels, that financial brands are not meeting people where they are to get their information in a digital world, especially millennials and Gen Z who get their information, who get their news from TikTok, from Instagram, from Facebook, from LinkedIn, from Twitter. And then there's a second pattern, a second communication pattern that I see is even more troubling than the first. And this comes back from the recent research that we've been doing here. No communication. And that is because we assessed a random sample of 20 community financial brands, their Facebook pages, a mix of community banks and credit unions. Only 5% had proactively acknowledged the current perceived banking crisis with communication to put their account holders' hearts and minds at peace. Put another way, 95% communicated nothing to their account holders via social media. Now, perhaps they were communicating. Maybe they sent an email. Maybe they sent a letter. But we have to consider the importance of the channels in which we communicate today. If we go back to the old psychologist Marshall McLuhan, his whole theme was around the medium is the message. The mediums in which we communicate are just as important as the messages that we communicate through those mediums. And the reason that we ran a random sample of community financial brands is because it is the community financial brands that assume the greatest risk exposure when it comes to communication gaps, which is the whole reason that I wrote the book Banking on Digital Growth in the first place. To make this even more real for you, I'm going to share some thinking that we received from our industry survey. Now, this is early thinking, of course, and the thoughts have been anonymized, but they are direct quotes from those that replied to our survey. One financial brand leader shared, quote, communication in our organization was the CEO emailing managers who then did not share with the frontline staff, and the staff was blindsided. Staff doesn't keep up with this stuff. Gaps in the industry are just going to be magnified in the situation. They aren't new. They've been there for decades. Banking doesn't do a good job of connecting with customers, and therefore they don't educate them. By educate, I don't mean financial literacy. I mean explaining the processes of banking that impacts customers. Fraud, holds, debit cards, limits, they all come to mind. Another leader shared with us, quote, unfortunately, our management team has chosen to remain silent. I feel these are opportunities for us to lead our members and calm any concerns they might have. The average consumer doesn't really understand what happened. To them, it is all a swirl, makes them feel uncertain and possibly vulnerable. I think more banks should have sent out messages basically saying, don't worry, we're strong, we're healthy, with good business practices and policies, and we're here to help you navigate through this. We've got your back. More broadly, I think if our industry suffers from a quote-unquote don't rock the boat mindset. This leader goes on to ask, did the drugstore chains remain silent and on the sidelines when COVID hit? It's a fantastic question. The pattern continues. Another leader recounted the communication that they received from the financial brands where they have accounts and noted, quote, regarding the other accounts I have at financial brands, this person goes on to list 5 brands with the accounts that they have. And here's the thing. None of them have communicated with me as a customer or a member at all, pretending it didn't happen, it being the collapse of these financial brands, pretending it didn't happen and continuing business as usual, especially with smaller institutions and neobanks, could result in churn to larger banks that are getting specifically called out in articles that they are not impacted. This could be a boon for major banks, and contributing to the narrative as an institution or industry is absolutely necessary. And then we get feedback from those outside of the industry. Because I did hear from another account holder who does not work in the vertical. They said, I received no communication, and I'm going to redact the financial brand that they're at. And this person notes, nothing, period. Back in the industry, there are other leaders who reported the same exact thing when asked, what communication, if any, have you received from other organizations you bank at outside of where you work? None want to respond, and another shared, none of the financial institutions I bank at have sent any communications. And still another noted, quote, I have received no communications from my financial institutions. The deeper question I have here is why? Why not take a proactive step to confidently communicate confidence? When the perspective that people have, perspective once again being context and framing, the perspective that people have is based upon what they are hearing, what they are seeing, and what they are reading. And that perspective, for the most part, via social media and the 24/7 news cycle, it is chaos. It is crisis. My take is there's a lack of confidence in leaders knowing how to confidently communicate confidence in a digital world. In digital, it is the new Main Street for many people, where platforms like TikTok and Twitter and Facebook and Instagram, LinkedIn, they've all replaced the town squares, the cafes, the coffee shop, where people used to once congregate, gather to commiserate and talk about current news events. But here's the good news. It does not have to be this way for you, and it doesn't have to be this way for other leaders, lenders, advisors, and associates on your team at your financial brand. That is because my team has created a helpful guide with 4 simple steps and a path forward to help you. And this is the key right here. The key is to confidently communicate confidence. Because confidence is contagious. And this resource is my gift to you because in step 1, you can watch 9 key lessons that we have curated from the Digital Growth University so that you gain a clear path forward on how to confidently communicate confidence in a digital world. And step 2, you can connect and learn from leaders, from digital leaders in the space who are already confidently communicating confidence. Leaders like Keith Costello and Jill Castilla. Because they're confidently communicating confidence, they're calming the hearts and minds of people in the communities that they serve. And then in step 3, you can share these resources, you can share these videos with other people within your organization so that together you're all learning and leveling up your knowledge and confidently communicating confidence as a team, as an organization. And then finally, in step 4, you can join the wait list for the Communicate Confidence workshop in a digital world that we have coming up. And we're going to be hosting it very soon because I'm predicting that there's the potential for even more confusion, for even more conflict in the coming weeks, the coming months. And I want to make sure that you and other leaders at your financial brand feel confident to communicate confidence so that you can guide others, both employees and account holders, beyond the confusion, beyond the chaos, by providing them with clarity, by providing them with help, and by giving them some hope. And that's because money is already stressful for so many people. And as I said many times before, this stress is taking a toll on their health, their relationships, their well-being, and people are looking for someone they can trust to guide them beyond this stress towards a bigger, better, brighter future. They're looking for someone to confidently communicate confidence. They're looking for you to share your knowledge, to share your expertise, to give them some help, but even more importantly, give them some hope. For more insights like this in the future, be sure to like this video, subscribe to the channel, and hit the notification button. Then share this video with one other person, just one person that you know who might find it of value, and they'll thank you for helping them. You can also tune into the Banking on Digital Growth podcast. Grab a copy of Banking on Digital Growth, the book, off of Amazon, where I share a strategic marketing manifesto to transform financial brands. And until next time, be well, do good, and make your bed.